we continued with our discussion on auditing, and I remember we covered on an auditor. We defined who is an auditor. We saw the qualification of an auditor. We also looked at we looked at the qualification of an auditor. We also looked at how he's appointed. We also saw how he can be dismissed from his auditing work, and those are the areas that we looked. We also looked at the reliability of an auditor. We also looked at other things like the professional ethics or professional ethics that an auditor must follow for him to be a full or to be qualified to be an auditor. So all those are the things that we looked at. Today, I want us now to look at a new topic, and I've already introduced the topic. Welcome, Elijah Mochoba. We've just started our session. So our topic today will be audit planning. Audit planning. When you talk of audit plan, we are talking of the development of an overall plan or expected coverage and conduct of audit. So we are talking of coming up with an outlined way through which audit will be carried out with. That is a predetermined way on how the audit will be carried out. That's when we'll be talking of audit planning. So what we do before it's involved in the audit process, they usually sit down and they develop a framework through which the auditor will use in the process of in the process of carrying out the audit. So that's what we are calling as a, or we are terming as a audit plan. So, and that's what we'll be looking at. And this plan is prepared before the audit commences. It is prepared at the beginning. So it will give an auditor's it will give auditors maybe an overview of what he will be taking at a certain point. So when we talk of audit planning, when the auditor has decided that I'm carrying audit in a certain organization, they usually prepare what we refer to as audit program. So the audit plan will resort to preparation of an audit program. When you talk of audit program, an audit program is a predetermined process or predetermined way through which auditors will follow when carrying audit for a particular client. So that's when we talk of audit plan. It is all about an outlined way of through which the auditor will be carrying the audit. Then any audit must be carried out based on the information that the auditor gets, because with audit it is usually carried out after the records have been prepared. Like accounting, because we say that and the person who comes to the business is also an accountant. Only that now for him, he will not be preparing, but he will be having an overview of what has been prepared. So that's when we'll be talking of an audit planner. So let's look at where does this auditor get information from client for the client's business. For him to carry out audit and to come up with an opinion, he must have relied on some information. And you remember, yes, can you hear me, class? Class, can you hear me? Class? Okay. Sorry, class, I was disconnected. I don't know what was the last point that you got from the discussion. Faith? Faith, what was the last bit that you got? The auditor will have to try to understand the business of the client that he or she has been appointed to carry audit at. And we've before I was disconnected, I was explaining the sources of information on clients' nature of business. We've seen before an auditor comes up with an audit plan, he or she must understand who is my client, or whom does he carry the audit for. So, and these are some of the sources that he can get information from. Number one is previous experience with the entity or the industry. Yes, one of ways of getting to know, to understand the business is by, first of all, maybe through maybe previous experience or previous engagement with the business. Some auditors are not appointed once in a business. Some of the auditors are appointed maybe maybe twice, thrice, or maybe they are reappointed after maybe their periods have lapsed. And that, given that they had a previous engagement with the client, they will be in a better position to understand them better. Or sometimes they might not have maybe conducted an audit to that specific client, but they might have conducted an audit to a client similar to the one that they are conducting an audit for, or for a client in the same industry. And when that is the case, the auditor will have a better experience of what is expected of him or her when carrying the audit. Number two, is discussions with people within the audit, the entity. So for an auditor to understand the audit, the client better, he or she can discuss with people within the entity. And when we talk of the people within an entity, this may include people like the customers, the employees, the suppliers. Those are in a better position to understand the client, the client of the entity. Number three, discussion with the internal audit personnel and review of internal audit reports. Yes, because they are, because we, in this case we are talking of statutory audit or external audit. The external audit can also have a conversation with the internal audit personnel. And in talk of discussion with the internal audit personnel, we are talking of now an auditor can organize a meeting with the internal audit of the organization, and these people can all help him understand better about the client. The other one is that discussion with other auditors and with the legal and other advisors who have provided services to the entities. Yes, an auditor can have a discussion with other auditors so that he can understand the organization better. He can have a discussion with other people who understand the entity well. So that's when talk of discussion with other auditors and with legal and other advisors who have provided services to the entity. The other one is journals and publications of the industries. Sometimes industries usually publish journals. There are other publications or like magazines and others. They talk them, and they may, these publications, they might have talked more about a certain entity or client. So from the publications or from the journals that are available that talks more about the client, an auditor can be able to understand what kind of an entity or what kind of a client is he expected to have. The other one is a visit to the entity's place of business. Yes, an auditor can also pay a visit to the entity's place of business, to the place of the business for the entity. They can even visit the facility so as to know uh, uh, more about the facility. So that's when you talk of such. The other one is documents such as minutes of the meetings, annual financial reports, operation systems manual, the budgets. Yes, through the documents that are kept by an organization, an auditor can be able to understand the kind of the client he or she is expected to encounter or to work for in this particular case. So those are some of the sources where an auditor can get information concerning a client. So that is it. Let's now look at the audit planning memorandum. After understanding the client, what kind of the client that he will or she will work for, an auditor now comes up with what we refer to as an audit planning memorandum. Yes, when talk of an audit planning memorandum, this is a document. This is a document that sets out the audit approach. That is how, whom, and when each item in financial statements will be audited, and it will be given the number of timing requirements, the requirements of the audit, the staff that will be used, the time and the time budget for each set of audit work. Yes, and it generally contains the following. Number one, there's a summary of terms of engagement. Yes, in a memorandum, in the planning memorandum, the first thing that will be there, it is a summary of the terms of engagement. When you talk of the terms of engagement, this will now and will now we remember when we are talking of the letter of engagement, whereby the auditor and the client agrees on the terms that they will work with. So these terms will be summarized in this memorandum. Like for example, if the auditor and the client had agreed to work on, let's say, debtors, he will indicate clearly that I'm auditing the debtors. Then the other one is that a job timetable giving provisional dates of the timing of the audit. Yes, after coming up with after including the terms of engagement, the auditor will come up with a job timetable. Let's say if it's an audit that will be carried in the month of let's say June 2020, he will indicate maybe 1st June I will do this, 2nd June I will do this, and then in that particular timetable he will indicate the work kind of work that will be done, and also the timing of the audit. At what time will that work of audit be done? The other one is that records of any changes about the client since the last audit. Like for example, if there was changes in management structure, the people in the management, maybe the type of business that the client is doing, he'll include such records in the audit planning memorandum. The other thing that will be included there is the background information about the client. Yes, of key client contacts. Yes, there will be some details of client contacts. Maybe if you the head office who is supposed to respond to what and at what time, that one will be given there. Then the other one is that there will be the extent of reliance on the expected internal control systems. Yes, as we shall see later, there are some procedures and some guidelines that are usually set in an organization, and these set guidelines usually guide how audit is carried out. And these guidelines are what we refer to as the internal control systems. The auditor will indicate clearly to what extent will I rely on the internal control systems? To what extent will I rely on the internal control systems of an organization? So that one will be written in the memorandum. So that memorandum now can be uh, summarized in a document or a record that we shall be referring to as audit program. So let's look at now something that we refer to as audit program. So when we talk of an audit program, it is a document that describes how the audit approach is to be implemented, how the audit approach is to be implemented, and the auditors usually develop an audit program for each account or area to which an auditors will be carrying audit in or at. So we are talking of, when talk of an audit program, it is an audit approach for each and every work. Like for example, if the auditor is auditing on assets, he will come up with an audit program for assets. If he's auditing the creditors, he'll have an audit program for creditors. If he's auditing the debtors, there will be an audit program for the debtors. So that's when we talk of an audit program. So I want you to switch on um, your videos so that you can see just for a while. I'm not requiring you to switch it for for a long period of time on your videos or what we call the we can share your webcam so that you can be able to see a sample of an audit program. I've prepared one, and I want you to have a look at that particular audit program. Yes, I want you to see that. I want you to see that bit. For those who can be able to join the to come, please do that. You see whatever I'm talking of. It is just for a few minutes, then you will return back to your audio. I know it consumes some bundles, or it consumes some data. For those who are now on, can see what I'm referring to when I'm talking of an audit program. I've got one that is on my screen. Yes, and it's my hope you can see it. Yes, let me see how many can now be in a position to assess that. It's only Musioka Faith who has switched on. Okay, let me give a minute to see whether there is someone else who is joining, to see what I'm talking of when I talk of an audit program. I'm requesting you to join on a video. You click on you share the webcam. After you've clicked on, I have shared with you, you can see now the second audit procedure will be to inspect the evidence of performance of bank reconciliation by client staff. Did the client staff do what we call bank reconciliation? I'm the one who taught, oh no, I'm not the one who taught you accounting one. I thought I'm the one who taught you accounting one. And one of the areas that you did in accounting one was bank reconciliation. So they will check whether that one was done. Then what is the timing? The timing will be final visit. What extent we shall look at December reconciliation and October reconciliations. Who will be responsible for that? It is audit assistant. So that is an example of an audit program. So when talk of an auditor coming up with an audit plan or an audit program, they will be preparing something similar to what I've shared with you. So I can see Musioka has been able to see that, and she now has maybe something in mind that is that when she hears of a bank an audit program, she can now be able to come up with one. Then for the others, the session is being recorded. You will be able to see that maybe after after the session is over. So that's when you talk of bank reconciliation. Sorry, not bank reconciliation. That's when you talk of audit program. So for Musioka, you can now log out from the video if you're willing. But if you want to continue, you can still continue maybe on that. She has already done so. So that's when we talk of that. So let's now look on. We continue and we look at now the problems in developing and implementing audit plan. Yes, we've come up with an audit plan, but sometimes the auditors encounter some problems. And what are some of these problems that an auditor encounters when they are coming up, and also when they are implementing their audit plans? Number one is that a company may have many clients with similar year ends. This will make allocation of time and audit staff difficult. Yes, sometimes when talk of the audit firms, they might be having many clients with similar year end. Like for example, for funds which have maybe year ending December, there could be so many. And because of that, it requires that as at the end of that year, most of your staff will be engaged with these particular clients, meaning that to allocate these audit staff and also their time for this audit, it will be hard. The other one is that at times there is what we call abrupt changes in the client's business, and therefore this will call for more audit time outside the planned time. Sometimes you usually go to the client and you find that they have altered maybe their business, the way you thought the business is conducted, and maybe they have altered that particular, maybe the way they are currently doing the business, meaning that you'll have now to maybe allocate more time so as to do a comprehensive audit on this particular client. The other thing is lack of cooperation from the clients. Sometimes clients may lack to cooperate with the auditor. The auditor needs some documents, needs some information, and they are not willing to provide. So that one will be a major challenge uh, for such an auditor. And at times it may not be out of maybe the maybe wish of the audit or the client. Maybe it's because they have not kept the correct records. So that's when talk of it. The other one is that sometimes some audit firms have high labor turnover or staff turnover, meaning that staff may be joining and leaving the organization quite oftenly. So when this is the case, it means that when you have allocated some staff some work, they might leave when the work is halfway done, and then you have to employ someone or incorporate someone when the work is halfway done. Therefore, meaning that you will have some challenges when it comes maybe to completing that audit in time, or keeping the time that you've allocated for such an audit. So that's when we talk of such. Uh-huh. Then those are now the problems or the challenges that an auditor gets when coming up with an audit plan. Then let's look at the audit planning procedures. Yes, there's a well outlined procedure that it's followed when carrying out an audit for any client. But the procedure that I'll be giving in this particular case, it will be for a new client. But I will also tell you for maybe an old or a continuous client where the changes occurs. So the first step or the first procedure is carrying out a preliminary review of the client. Carrying out a preliminary review of the client. Yes, this is when talk of a preliminary review of the client. This is when an auditor just tries to assess the client. This um, this helps the auditor to understand the client better and his or her business. So that's when you talk of the preliminary review. You just understand who is your client and what kind of a business is he engaged in. And after knowing the kind of business that the client is engaged in, you also understand what kind of records is he likely to keep. Like, for example, in a restaurant, the documents that will be kept will be quite different from the ones that will be kept in a hospital. So that's why it's good to have a preliminary review of the client. Number two is discuss with the management to obtain an understanding of the management structure and the general feel of the current operating circumstances of the client and any factors that affects client accounting and internal control systems. Yes, after understanding, after doing a preliminary review of the client, it's you now and have a discussion with the management so as to understand how the accounting setup, how the organization is being run, what is the current atmosphere in the organization. You try to understand what are the things that are being done in the organization. So that's when you talk of that when you talk of understanding with the management, to understand the management structure, you understand how the organization is run, what is the current situation in the organization. So that's when you talk of that. The other thing is you communicate with the previous auditor of the client and obtain from him the information that is laid to the audit, that is sorry not is related, that is relevant to the audit, and the audit of the client. So because we say that this is an auditor who is carrying audit to a new client, if it happens that he's not the first auditor of the company, that is, he's maybe an auditor who is taking over from an outgoing auditor, he should, after communicating and discussing with the management and getting to know their stand as far as the management and as far as the preparation of records are concerned in the organization, he can communicate with the outgoing auditor so as to understand from the auditor's side of view uh, the client better. So this one helps the incoming auditor to understand the kind of risks that he's likely to be to maybe to face, and also it also helps him to understand what kind of work he will be likely to carry, and also minimize his or her risks when carrying out the audit. So that's when you talk of that. The other step is seek to obtain a preliminary understanding of the nature of the client's accounting and internal control system. This assists to determine the extent to which the auditor will rely on the internal control systems. Yes, the auditor, after communicating with the outgoing auditor, he will now seek to understand the nature of the client's accounting. The auditor will try to understand how does the client do his audit, carry out his or her audit work. He will also try to understand how is the internal control system of an organization, how safe, what are some of the measures that are carried out to protect the assets and resources of the client from maybe theft, from misuse and others. And this one now helps him to know to what extent will I rely on the maybe the information that I'll get from the clients. How much will I rely from the information from the records kept? The other thing is that is now step number six, number five, sorry. Consider any accounting standard legislations that could have impact on the audit of new client. Yes, any bit of audit is governed by what we refer to as accounting procedures, or accounting or auditing standards. Any audit that is done, there are some standards or regulations that govern it. Like, for example, when I'm auditing, let's say, asset, there is a procedure that I must follow, which might be different to when I'm auditing a liability. So the auditor will have to look to check whether there are some procedure he or she, or some standards or some regulations he or she is supposed to follow uh, uh, before starting or commencing the audit process. So that is it. The other thing, the auditor will do, that is number 6, is that the senior auditor should check the nature and timing of reports and other communication of the client so that such timing can be accommodated in the plan. Yes, the auditor should look at the timings of specific reports, specific communications, such as AGM dates, stock taking dates, management reporting dates, so that he can accommodate them in his audit plan, because it will be awkward for him to have in his audit plan that he'll be carrying on audit when the AGM is supposed to be done. And the auditor, like we said in our last session, he's supposed to attend that annual general meeting and give information, give his report to the shareholders. So if he conducts his audit at that particular time, it will be not light. It will not be in line with the practices of the organization. The other one, number 7, is that the audit senior should determine the number of audit staff required. Yes, because after now assessing the kind of work that he is likely to take, the auditor will now determine how many staff, what is the number of the staff that is required to carry out audit in a certain area, and also their level of experience. Yeah. So because various clients will require different number of staff, various also the level of experience will also matter based on how complex or how easy the audit will be. The more complex the audit will be, the more the number of audit staff and the more experienced staff will be required. But for a simple one, or an easy audit, will require less number of staff and less experienced ones. So that's when you talk of that. Then the number 8, the last step, is to prepare audit planning memorandum that summarizes the scope of work under the engagement and the strategy to be followed to meet the client needs. I've already discussed what is the planning memorandum of when it comes to audit planning. So we say that this is like it's a program to be followed. After understanding that, you now come up with a program that will be followed. So that is when you are talking of auditing a new client. If it is already an existing client, the auditor will start from step number 4. Step 1, 2, and 3 will not be important. You will start with step number 4, whereby we talk of obtaining preliminary understanding, all the way to step number 8. But for a new client, you have to go through all the steps from the first step to the 8th step. So note that. So let's now look at something else, and we shall look at something that we call peer review. Peer review. When we talk about peer review, we say this is an independent review of a firm's accounting and auditing practice. And it is intended that the review be done by practitioners upon fellow practitioners, hence the term peer review. So when you talk of peer review, this is where a practitioner or a professional in a certain field is subjected to maybe some review by a fellow practitioner. Like for example, an auditor's work checked by another auditor. When that is the case, we'll be talking of there is some peer review. They are checking each other's work. So that's when we talk of peer review, and it's very important in auditing, because this ensures that the work given out, the report given out by an auditor is free from errors. It is also the auditor was also complied with professional standards. It is also gives an assurance to users that the report gives the true and fair view of the organization. Don't forget, when we talk of auditing, we say that the purpose of it is to give the free and fair view of the organization. And therefore, that one now takes us to another level, that is on the objectives of the peer review. Why should an auditor be reviewed by another auditor? Number one is to promote compliance with professional standards and other technical pronouncements. Yes, with peer review, it helps an auditor to comply with the professional standards that are set for when carrying out audit. And I've said we have several international auditing standards. So when an auditor maybe is checked to and checks another auditor's work, is able maybe to advise on areas where there's some standards have not been followed, or where they have been followed. Maybe he can advise on how to go to continue maybe observing such standards. The other one is to provide reasonable assurance to the users of financial statements that professional standards have been complied with. You remember, we said that the report from an auditor is highly trusted. Many people trust the auditor's report. Therefore, when you are told this report is not from only one auditor, one auditor did the work, another checked what the auditor did, you will be in a better position to trust such a report. So that when talk of, it will give the user some level of assurance that whatever the auditor is presenting, it is okay, or it is giving the true status of the organization. The other one is that helps to promote uniform application of generally accepted methods of professional practice. Yes, this peer review promotes uniform applications of the accepted methods of professional practice. It helps auditors to follow some already set guidelines. So if you are comparing maybe the report for 1 year and another year, they will be okay. They will be following the same guidelines. Yes, so that's when we talk of that. The other one is that to increase user confidence in reliability of audited financial statements. Yes, we say that when you have indicated that someone else checked what you are presenting, people will have more confidence with what you have presented. Therefore, they will rely on your information better than when it is only one auditor who did the work alone. The other one is that it enhances the status and the image of accounts to the public. Yes, when you've done the peer review, the status and the image of the accounts to the members of the public will be will be enhanced, because people tend to trust more on what has been done in this particular case. The other one is that it helps to identify weaknesses in the audit process. Yes, if one auditor had made some mistakes. Such mistakes will be better recognized or will better identified during the peer review. They will understand, they will be able to note areas where there was some problems or where where some there were some errors when preparing this particular audit process. So that's when you talk of the objectives of the peer review. And then we also have the reasons of introducing the peer review. Number one is it is deemed appropriate by the Institute of Public Accountants of Kenya. You say that an auditor must be a member of ISPAC. So that is one of the standards that have been set by ISPAC. The other one is that it is a one way of self-regulating for for this professional body. It's a one way of self-regulating of organizations self-regulating themselves. So that's when you talk of it. So it is a better way of these auditing firms to self-regulate, other than to wait for the government and come and regulate them. So the other one is that it ensures that the professionals apply and observe the professional standards. Yes, let's now look at, in the audit process, we shall be talking of audit recording or audit documentation. And this is accordance to the international standards 230. When you talk of, in my notes, you'll be finding somewhere I'll be talking of ISA. That one represents international standards of auditing. So, and I said there are so many, they are all the way to 500, but it's not a must you understand all of them. You can understand just a few, but the ones that you understand, it's good maybe to get them or to understand them. But there is also a guidance that you can even refer on all these standards. So what are now, when talk of audit recording, say that the auditor must record all, document all the information gathered as evidence in forming an opinion on the financial statements. Yes, when an auditor has given out maybe his report, he will be giving information. He'll be giving the evidence of all the information that he had gathered as evidence before coming up with an opinion. So that's when we're talking of audit recording. And this particular evidence, it is recorded in the form of records called the working papers. And these working papers are obtained and during the audit, and they are also prepared by the auditors. And for the purpose of having the evidence on the opinion that he came up with, the auditor usually retain these particular working papers. So we'll now look at what are these working papers. Yes, I want to see whether I'm alone or together with you. I've started a poll there. I've started a poll and I want you to, yes, I've started a poll and I want to see whether so as to see whether I am alone or not. There is a poll that is learning. Other thing, the other use of these working papers is that they provide details of problems encountered together with the evidence of work performed and the conclusion reached. Yes, working paper will give the problems, the details of the problems encountered, as well as the evidence of work performed, and as well as the conclusion reached. So in simple terms, they also act as a good reference point for future audit. They act as a good reference point for future audit. The other one is that it enables the auditor to adopt a methodical approach to his work. Yes, the audit papers will help the auditor to approach a methodical approach or the methodical way for his work. When you talk of methodical approach, this is where it establishes a step-by-step approach to the auditor's work. That's when you talk of that. The other one is that working papers assist in planning and performance of audit in future financial periods. Yes, working paper will assist in planning and performance of audit in future financial periods. Yes, they will help the auditors to plan on how the audit can be carried at a future date. The other one is that if sued for negligence, the auditor can use the audit papers as evidence of work done. You remember we said that in the auditor's negligence can be a point of discussion in a court of law. An auditor can be taken to court for negligence. So if he's sued for negligence in a court of law, he can produce the working papers as an evidence for work done. So that's when you talk of that. The other one is that working papers can be used for training of audit staff. Yes, when you are training the audit staff in a certain area, you can use the working papers so that you can train them on maybe audit program, the specimens of schedules, and other things, so that they can also use them to refer to them. So that is it on working papers. So, and then we can say that the working papers can be divided into two. There is what we call the current audit file and what we call the permanent audit file. So when talk of the permanent audit file, we say that it contains documents and matters of continuing importance and are required more than one financial period. Yes, when we have an working papers which are supposed to be in the business for a period of 1 year and above, that one we refer to it as a permanent working papers, permanent audit files. Then we have the other one, which is current audit files. Current audit files, it contains the current year's work or current year's audit. So it contains information pertaining to a single year, unlike the permanent audit files, which contained a longer time audit papers. Then we have the last thing that we shall look at. We have what we call standardized working papers. When talk of standardized working papers, this refers to predetermined format of presenting and documenting audit findings formulated by individual audit firms. Yes, there is what we call a standardized working papers. When you talk of a standardized working paper, this is an already prepared format of presenting and documenting audit findings, and this is it is formulated by individual audit firms. Already it has been prepared before the audit has been done. So what happens? It improves the efficiency. You don't just need to have that particular standardized working papers, and from it you know what to do. You are not preparing a new audit working papers when you are carrying out audit work. You already have a prepared working papers with a certain standards. So that's on talk of standardized working papers. So what are the advantages of these standardized working papers? Number one is that they improve the efficiency with which working papers are prepared. Yes, because it's already we have a template of what you're supposed to prepare. It is very efficient. There is no the chances of making errors are minimal. The other one is that it acts as guidance for instruction to audit staff. Yes, when these standardized working papers, they act as guidelines for instruction to audit staff, and therefore you can even delegate some work. Yes, if you want to give some instruction, you can use the standardized working paper so that you can show your workers this is what you is expected of you. So the other one is that ensures that all relevant issues in the audit are addressed. Yes, this standardized working paper ensures that all important and relevant issues in the audit are addressed well. That is the advantages of the working paper. What are the disadvantages or what are the demerits of having the standardized working papers? The other one is that the number one is that it's not appropriate to follow mechanically. Yes, because of the fact that this is a template that has been prepared and it's not specific to a certain organization. It may not be an appropriate method for one to follow. The other one is that it limits the judgment of workers preparing the papers. Because you are working on already prepared template, you will not be able to give your personal judgment because it's not, you don't own that particular working paper. The other one is that the client staff may become familiar to them with them. Therefore, they will know where to the clients, the auditor will be looking at. Therefore, frowns will not be prevented. So they can be able to cover areas that they know that the auditor will come and check. And therefore, frauds will not be covered in such particular areas. Then the other one is that the audit work becomes very mechanical with the use of standardized working paper. Yes, and you know it is supposed to be judgmental. So the audit work is supposed to be judgmental, and when you use the audit work, standardized audit or working papers, it turns the work to be too mechanical. So that is it when it comes to audit planning, and that marks the end of that topic. So I want to hear from now my student. So when you talk of the standard working papers limit the judgment of worker, what I mean by that is that because it's an already prepared template, the auditor will be supposed to work within what has been recorded in that particular template. Nothing else. He should not work outside that particular template. And that's when we talk of it limits then the judgment of the auditor, not employees, because you are just working on a pre-prepared template or working paper, standardized working paper. So that's when you talk of it limits the judgment of auditors. So that is it. So they cannot be able to give their personal opinions